Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for July 28th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We have FOMC has passed now, and I have a key level at 2158.5 as being the FOMC number. That's going to be a very important market-generated pivot that we're going to use here for the foreseeable future. One thing about the ES right now, it continues to hold within this multi-week range, and it's a very, very narrow, balanced trading range. And our levels of 2154 and 2168 continue to be the edges of that range. That continue to be great zones to do business here on an intraday basis, but on a swing basis, there's really still nothing yet to do. We do have a bit of a P-shaped profile that has built out up here at highs. Typically speaking, that would resolve itself by auctioning back into the LVN of that profile back toward 2120 and perhaps seeing a bounce back up to continue to fill out this profile. However, anything can happen right now as a result of a breakout from this range, and we have to continue to watch the edges. If there is any failed range expansion at either edge of the range, that could be a very big heads up for the next key move. For example, if prices were to push to the upside here and reject significantly, that could be a very clear indication we're headed downward. If prices, on the other hand, were to break down and quickly snap back up, that could be an indication we're headed to new highs. So watch for failed range expansion at either edge of this range. Eventually, we're going to see expansion, but right now, very, very tightly coiled price action and really not a lot to do here on a swing basis just yet. Now, looking at the intraday time frame, you can see again, we've been talking about is fading the edges of the larger profile here. We've continued to talk about 68s, and you can see we saw a move down off of that zone yesterday. We continue to talk about prices at and below 54s for a shot at swinging this thing back up, and we continue to see this behavior. So again, we have to continue to trade the auction that's in front of us until proven otherwise. And so any prices above 68 continue to be opportunities to fade. Anything back into 54s or below continue to be opportunities to fade back up until proven otherwise. Once we see expansion, you're likely going to see a multi-day move in the direction of the break. So we have to be willing to change and adapt our approach once that occurs. All right, let's take a look at crude oil. Here's crude oil, and this is the daily time frame of crude here. One thing we've been talking about with crude oil, and I can hide this fib here to open these things up. One thing we've been talking about with crude oil was the likelihood that we were going to push down into these 42s. That was our big level here to reach, 42s, and we finally got it. Not only did price reach that level, it kind of got stuck in the mud at that zone. I did mention that the next swing bounce could occur off of 42s. So we could see the next bounce off of 42s, but any bounce into and as high as 44.40s could be a great selling opportunity for the next wave of weakness below. Remember, on a higher time frame basis, what we've been talking about is the fade off of the VAH up here has led to value, and then taking value offered implies a move to the bottom of value. That's 37.06 on this composite. And the next LVN below that's going to be 35. So we could be looking at a further continuation toward 35 to 37 before we see any meaningful bounce off of that zone. This is a big time key level down here at 35, and right now we're at 42s. So we got to see how this responds. I still believe that any bounce is still a selling opportunity for a continuation downward. All right, let's take a look here at the intraday time frame for crude oil. Looking on an intraday basis, the key level that we have here from the FOMC is 42.01, which coincides nicely with 42s, the key level. But you can see after the significant sell-off we've seen here recently, prices have basically held at lows and have formed a very clear range. This is the range to fade on a short-term basis. So anything in the 42.20 is an opportunity to fade back toward 41.70. Anything at or around 41.70 is an opportunity to fade back up. Eventually, a breakout from this range will spark the next key move. Again, if we do break this range to the upside, look for a push back toward 5-day value, which is 42.90. Any bounce, again, should be seen as a selling opportunity for a swing move downward. All right, let's take a look at gold here. Here's a look at gold futures. One thing we saw with gold was that price was pushing into our area of support, which was 1306 to 10. That was the major area of support that we were looking at. And if I hide these drawings to open up the price chart, you'll see this is the zone of support we were talking about, 1306 to 1310. We got very close to that area, getting as low as 1310.70. And now we're starting to see the bounce up. And that is significant because what I mentioned before is holding off of this zone opens up a move into the upper edge of the range into 1370 to 1380. That's why I mentioned before over the last couple of weeks that should price get into this area, there could be a significant 60 to 70 handle rally. And right now, we've already rallied quite a bit, getting into about 1351s right now. So look for a continuation higher. Pullbacks likely to be defended. Our key FOMC level is 1334.30. And any pullback into this zone could be a great buying opportunity for a continuation higher. So right now, we've seen prices hold. We've seen bulls come in and defend our zone of support so far. The expectation is for another push into this area of the chart, 1370 to 1380. All right, let's take a look at the NQ now. Here's the NQ. I've mentioned before we've seen quite a bit of strength in the NQ, and we're likely going to continue to see that strength till we see the next edge of resistance, that being 47.30. So you can see back here we've reached that resistance before dropping into 3900. And so far after Brexit, we've seen a big slingshot move right into 47.30. So this is a big time area of resistance that we're going to continue to watch. You can see the profile drops off significantly in that area. So once price reaches this zone, that could finally be a zone where we see some sort of rejection. If so, we could be looking at a move all the way back toward 45.50, and that could be another buying opportunity for another attempt at new highs and a continuation higher. So right now, really, we got to continue to see quiet uptrending behavior until we see that rejection, and that could come off that 47.30. So it's still quietly bullish until proven otherwise. And if we take a look at the intraday time frame right now, you'll see 4690.75. That is our FOMC key level right now. So that's the key level to watch here as we move forward over the next week, 2 weeks, and even in the months out as being a market-generated pivot. And overall, one thing I'm noticing here is that prices above 47.10 right now. First rejected here. They've been rejected on the first pass here in overnight trading. So what we're looking for is some sort of rejection. So with the previous session's high and close both being rejected, and we've seen a push downward in overnight trading, any bounce into 47.12, 47.15, that could be seen as a selling opportunity for a continuation back toward 46.80, at least on a short-term basis. So that's something to watch as we head into the early portion of the day. Any acceptance above 47.15 would imply a push into that 47.30 key level. And again, any prices above that zone are likely to be rejected, at least on the first test, as price attempts to establish acceptance at these zones. All right, that's it for now. Let's see how this thing plays out heading into the rest of the day. Good luck and trade well.